engulfing bearish line. Now it looks something like this, and I will show you on chart as well so that you can understand how to work with it. As its name states, engulfing bearish line is extremely bearish pattern. So once you see that, remember, bears are in full control. This pattern consists of a small green body that is consumed or eaten by the next large red candlestick. So once you see that large red candlestick, remember, bull run is a thing of the past. Bears are in full control. As and when it appears on top of the trend, then it is considered as a major reversal signal. And this red candle is not a good side to be in. So if you have bought something and you happen to come up with this candlestick, then get out. Don't sit into that stock. If you're in loss, book losses, as it's not a good side to be on. Now I will show you this candlestick on chart so that you can understand how to pick this pattern easily. Engulfing bearish line. Now this means that first you will have a small green candle. Example right here, 43.99 is the open, 44.50 is the close. Okay, but the next day it suddenly opened at 44.48 and then fell off with extreme force and closed at 43.22. So this red candle has eaten this green candle completely. Whenever you see this kind of a thing, it means a reversal has happened and a fall will be there. Now this is a perfect signal. Another example is right here. It opened at 42.34 and closed at 43.06. Closed at 42.83. The next day it opened at 42.82, 1 cent lower, and closed at 42.34. So basically it ate the complete green candle in this red candle. That's this pattern, and there is a fall after that. So remember this pattern. This is a wonderful pattern, but don't overly rely on it. When I say don't overly rely on it, because I've seen this pattern works, but what I call the flip side, or what I call the side where you have to be vigilant, is the top. Example, this high. This is your what I call stop loss, because if the price moves up, then you have to have a stop loss. Not only on this pattern, on all pattern, always remember to have a stop loss safe, because if things move out, then you have to have an understanding what to do next. And in the daily level, this pattern have what I call error percentage. So the next candle can make you make illogical decisions. So be vigilant, put a stop loss on top. But if you see this pattern on a weekly or monthly scale, then I would suggest don't worry, because on those time frames, this pattern is clearly the winner. But on the daily or on the intraday charts, this pattern usually makes you a fool as well, and you need to be vigilant. But what I call another quick trick is, if you are trading for a quick buck, let's say for a day or two, then this is a wonderful pattern, because after this pattern you will find 2-3 days of money. Example right here. Example, 1-2 days. On the second day it opened lower, you got the money. And if you had put the stop loss at the highest point, then you could even eat the profit till here. So this is a workable pattern, but always remember to have a stop loss. Thank you.